Yesterday I gave the bull case for the stock market and why the market could go higher from here, but today I wanted to touch on the bear case and the worst case scenario for stocks. We just had the Q1 GDP report for this year, and it came in lower than estimated at 1.6% compared to 2.5% estimated and 3.4% from the prior quarter. This combined with this being the lowest reading since Q2 of 2022. And then for the price index coming in for quarter over quarter at 3.7% compared to the 3.4% economists estimated, shows that the economy could perhaps be heading towards stagflation and increasing the odds of a 1970s scenario of a double inflationary spike and a stagflationary economy. This is the risk right now. And then we have the PCE numbers for the month of March coming out on Friday, which is tomorrow. And if those numbers are hot, combined with Jerome Powell talking hawkish like he did in the Jackson Hole meeting from August 2022, pretty much saying that if he repeats the latest comments that inflation's still hot, we have a ways to go towards 2% now. The Fed started changing its tune just over a week and a half ago that they're not confident in these inflation in the latest inflation numbers getting inflation to that 2% level, so interest rates might have to be higher for longer. So if Jerome Powell continues that narrative on the May 1st meeting, which would be next Wednesday, then we're likely to see even more drawdowns in the stock market. Right now, with this lower than expected GDP report, we're seeing stock futures open down over 1% over the major indexes due to the fears of a stagflationary economy. And then we also had Meta earnings last night dropping over 50% at one point although they beat on their top and bottom lines in the earnings report, they issued poor second quarter guidance due to increased CapEx and AI spend, which is leading investors to be a little bit spooked because of that, because last year was Meta's year of efficiency, and now they're going into a huge investment again for AI. Honestly, I think this is a classic overreaction in my opinion. I don't think Meta deserves to be down over 10% because of cutting their Q2 guidance due to this AI spend. This will likely not help Google, Pinterest, Roku when they report earnings. But I think because Meta is increasing their AI spend, that'll likely help AI hardware players like chip makers like NVIDIA, SMCI, AMD, and so forth. But Meta stock being down this much, over 10% and down 15% at one point, will not probably help the market either. So between Meta down and then the lower expected GDP report bringing back stagflationary fears, there's a chance that the market could go down over the next few weeks. And also Jim Cramer, last night, he likes to cite legendary technical chartist Larry Williams, and he's been right on where the market's been going for a while, and I've really been following Larry Williams' work since 2022, and he says that the stock market pullback will likely continue around mid-May, perhaps May 20th, so it's possible, especially with the lower Q1 GDP and if Jerome Powell talks hawkish in next Wednesday's meeting. So this is something we have to watch out for. And I just wanted to give a bear case scenario because yesterday I gave a bull case scenario on where the market could go.